Ordinarily, it's not the time of year when I'd recommend buying a tax preparation company. But 2014 is not an ordinary year. And H&R Block, the largest tax preparer in America, is not an ordinary company. I'm not saying this because H&R Block just reported a fantastic quarter this morning, showing that they had an excellent tax season, with the company earning $3.29 per share for the quarter. That was a 6-cent earnings beat on higher than expected revenues that rose 16% year over year, hence why the stock rallied $1.42 or 4.6% on a really terrible day for the market. No, I've adored and continue to adore H&R Block, because the company is selling off its internal business bank to B of I Federal in a deal that should close this September. Why does this matter? Because until this bank is gone, H&R Block is classified as a bank holding company, which puts all sorts of restrictions on how much cash they can return to shareholders via dividends and buybacks. Once this bank business gets sold, though, the company will be free to return much more money to its shareholders. Given that they have $2.3 billion in cash and equivalents on the balance sheet, there could be a monster return in store for those who own a stake in this company with the market cap of about $8.8 billion. Now, the stock's up 6% since we last spoke to the CEO back in January. I think it's headed higher. Don't take it from me. Let's check in with Bill Cobb, the president and CEO of H&R Block, to hear more about the quarter and his company's prospects. Mr. Cobb, welcome back to Mad Money.
Jim, thanks for having me back.
Good to see you. Good to see you.
How are you?
Bill, last time you were on, we talked about something. I typically don't do this, but it just seems to be true. Well, you had an ad campaign.
Yes.
And usually ad campaigns, frankly, don't move the needle. This one did for you guys, didn't it?
I've got my bow tie on, as you recall.
Yeah.
So I wore that back for you.
And was the Get Your Billion Back
Get Your Billion Back
resonated?
America? Yes, it did resonate. And it did two things for us. One, clients, customers, consumers all fell in love with it. We had very high awareness quickly. They associated with H&R Block. Our numbers were off the chart. But really, the great thing it did for us was it galvanized the system. Because here was one of their tax pros who became the spokesperson for the brand. He was a cute little guy with the bow tie.
Right.
And every office I went to, people were just fired up, and we had the cutouts of him. It actually worked out to be terrific.
Wait, it's funny. I was going to ask you about everything. You say every office. You have a lot of offices. You're still, you have a big bricks and mortar component that's working. It
is working. We have about 10,300 offices. You know, what we do as a company is we assist people in preparing taxes, or we let them do it themselves. Our principle is we want to serve clients the way they want to be served, so we cover the entire market.
You made some things very clear. You used a phrase, a layer of complexity, which of course involves affordable care, that may be the key metric of your company. The more layers of complexity, the more we need you.
I think what happens is we've been in this business, it's going on 60 years now. We understand how to adapt to all the tax changes. The tax changes come continuously. What's coming up in this year, you know, for next tax season with the Affordable Care Act is the biggest change to the tax code in 20 years. Our scale, our knowledge, our tax institute that we have really enables us to understand this and prepare accurate tax returns.
Affordable Care Act would mean, if done right, money back. If done wrong, what happens?
Well, it means a couple of things. One, it means that you have to reconcile. If you take a subsidy, and that's the wrong word, it's an advanced tax credit that you get, you then have to reconcile that against your actual income when you prepare your taxes. That could be a plus or minus.
Right.
And if you actually did a good thing and earned more money, you actually will have to most likely deduct off your refund that amount. It gets very complicated. Consumers are still very confused about this. We understand this law, I think, better than anybody. So we'll be prepared next tax season to be able to help people navigate through this.
Okay, now, there are two components to what I like today. One was everything you said came true, which is in terms of the business and the complexity. But the second, we're just getting closer and closer to this. What you even say, your CFO talked about the return of capital. And your CFO is pretty mouthwatering, frankly, because he's basically saying that there is going to be a big sum. Have you thought about how to do it best? Because this is the most important thing for a lot of people who want this stock to go up right now.
Yeah, and of course we've thought about it. Right. We're not ready to announce that specifically. What we tried to do today in the earnings call was give specifics around, because there's really two components to the return. There's the excess capital that will be freed up by the bank sale, and also the capital that we've accumulated over the last couple of seasons.
Right.
So we think that's in the neighborhood of $1 billion worth of excess capital. On top of that, our board has agreed that we will incur incremental net debt. So the two in combination should have a very nice return of capital to shareholders.
But that was a surprise. I mean, I was listening to McFarland's comments. As mentioned on our call to discuss the exit bank, we expect to have considerable amount of excess capital on our balance sheet. Typically, companies are I'm not saying this is not promotional at all, but this is an extraordinary percentage of market cap that is cash.
Yes. We have $2.2 billion in cash right now. Part of that is because we have not been able to return capital to shareholders beyond, except for dividends, which we're about to issue our 207th consecutive quarter. So we've accumulated a lot of cash, and that is an important component for shareholders. And we have been shareholder friendly since I took over. We bought back 12% of the stock, raised the dividend 33%.
Last question close to home. I think this is really important. President, administration, they want you involved with the student loan partnership. Student loans are really one of the biggest drags on our country right now. What can you do to help?
Jim, this is over $1 trillion in student loan debt. We have taken on a program called Dollars and Cents, which is all about advancing financial literacy for teens. We are about to expand that. Next year, we're going to have a game-based challenge for kids. We're going to give out over $3 million worth of scholarships to kids because we want to do our part. And we're going to make it a game. Right. So, you know, that's the best thing with kids.
Yes, it is.
And to give a significant amount of money in the $20,000 to $25,000 range per kid. They'll compete. And it'll be to try to help in a small way to do this. But really, what'll be the good thing for every kid who participates, they will learn a lot. They'll have their own budget, pay bills, et cetera. More to come on that.
Biggest drag maybe for the next 20 years for our economy. That's great that you're doing that. That's Bill Cobb, President and CEO of H&R Block. I want you to go over the conference call. You will understand why I'm so excited if you just read this conference call. Don't move. Lightning round's next.